Good afternoon, everyone. Welcome to the Atlanta Business League's weekly COVID-19 Issues and Opportunities series. I am Leona Barr Davenport, President and CEO of the Atlanta Business League. Thank you for joining us today. This afternoon, we're going to talk about the CARES Act program with a particular emphasis on the PPP, Payroll Protection Program, and the application process. We have with us today the District Director of Small Business Administration, Ms. Terry Dennison, Mr. Michael Coleman, who is partner with Thompson Hines, Mr. Farron Logan, Senior Vice President and Chief Lending Officer with Citizens Trust Bank. So we are going to move right onto the session, but a few housekeeping rules, or if I could share that, I'd like to share with you. If you have any questions, please enter those into the chat room. You can do that throughout the presentations. In the chat room already is a link to the resource guide. The resource guide includes information about loans and various, provides links to programs that are there that have been put in place for small business owners. And it explains what it is. So please take the time to look at that after the session. The presentations will run from 3 to 3:30 p.m. At 3:30 p.m., Ms. Samantha Judy will ask the questions that you have placed in the chat room, and you will get responses from our speakers today. If your question is for a speaker in particular, then please indicate that when you type it in. And tomorrow, please expect a survey from us, the Atlanta Business League, to let you do. We will ask if the session was of value to you, and we'll also ask if there are other topics that you would like to hear from us, that you'd like for us to bring, the Atlanta Business League to bring to you. So we want to go ahead and jump right on into the presentations, and we'll begin with Ms. Terry Dennison, District Director for the Small Business Administration. Terry, thank you for joining us.
Thank you for having me on today, and good afternoon, everyone. I'm going to take a few moments to share with you what the SBA, the U.S. Small Business Administration, is offering in response to the COVID-19 situation. I'm going to preface what I'm going to say by saying that this is a ever-evolving set of facts. These are the most current facts and information that I have available for you. And what I would encourage you to do is to continue to check on two particular websites for the most up-to-date information. First, the SBA's website, sba.gov/disaster, and also treasury.gov/CARES, as in the CARES Act. Those are your two main sources, official sources, in terms of what these two agencies are doing with regards to the programs that they're standing up to respond to this crisis. Basically, I'm going to touch briefly on the four things that we have available. The first thing is our economic injury disaster loans. This is not a new program. It's a standard offering of the agency whenever there is a disaster. Usually we're talking about a localized natural disaster. This is the first time the agency has offered this program on a nationwide basis in response to a pandemic. So very different dynamics, but we use the basics of this program. Essentially, it's a loan up to a direct loan from the SBA, which is unusual for us. We usually guarantee loans made by commercial lenders, but this is directly from the SBA. $2 million maximum, 30-year term. Currently, the interest rate is for small businesses, 3.75% interest rate. And then for nonprofits, which normally are not eligible for SBA assistance, that interest rate is 2.75%. Basically, you can use the proceeds to cover all the expenses that you would have in operating your business, particularly your fixed costs that are there regardless of how much revenue you are, or in this case, not taking in. So payroll related expenses, accounts receivables, rent or mortgage payment on your building if you're buying your building, anything along that lines. We have currently a 12-month deferral on this program. It's automatic. You do not have to request it as you would normally. And the other thing is that in addition to being a deferred, 12-month period, it's there's no prepayment penalty. So regardless, you're not going to have to, if you want to pay it early, you can. There's no penalty there. And those loans are going to be available through December 18th of 2020. For our purposes here, the disaster started as of January 30th, 2020. So you can go back and figure out what you would need as well as go forward for what you think you would need. The second thing is the Economic Injury Disaster Loan Advance, which actually came from the CARES Act. Basically, when you submit an application for an EIDL, as we call them, Economic Injury Disaster Loan, you will be able to obtain an advance up to $10,000. We have revamped our portal. People may have experienced some issues with it when the loans were first made available. Totally revamped the portal, and now very streamlined, and you can use that same portal to ask for this advance. The advance is forgivable, even if for some reason the EIDL is not approved. The goal right now is to have those out within 3 to 5 days, the advance, and then the loans within maybe a week to 2 weeks. And that time is coming down as we do more of these. The third thing I want to mention is the SBA Express Bridge Loan. Once again, this is not a new program. This is something we've had around for a couple years. And it's a kind of an alternative to the advance. For example, the advance comes, which is forgivable, only goes up to $10,000. With the SBA Express Bridge Loans, this is our usual offering of the SBA Express Loan Program, can make loans up to $25,000. Participating express lenders provide these loans. They get to use their own forms, their own processes, so they're able to turn these around relatively quicker. And you would need to repay, of course, those proceeds from the EIDL loan once it's approved. So that is an option to the advance through the CARES Act. And then, of course, the final thing I'm going to mention is the one everyone is interested in, and that's the Payroll Paycheck Protection Program. Or actually the Payroll Protection Program, sorry, too many P's in there. Basically, this is a loan that is provided through private participating SBA lenders. So anyone who's currently participating with us could offer these, and I'll comment on that and clarify about that in a second, could provide these loans. And the key is that the loans can be forgiven over a period of time if the payroll is maintained, or if you're able to bring employees back and keep them on payroll at the same level of payroll activity for 8 weeks. So this loan program is available through June 30th. The maximum loan on this one, as opposed to the EIDL I mentioned earlier, can go up to $10 million. The interest rate currently is 1%. I know there's some earlier things that may mention a 0.5%, but that was actually changed about a week or so ago. So the interest rate is 1%, and you have a 2-year repayment period for that part of the loan that's not forgiven. Okay, eligible businesses or eligible entities, of course, small businesses, generally those with fewer than 500 employees, and there's some other exceptions in there as well. This does include sole source sole proprietors, your independent contractors, and self-employed persons, as does the EIDL and the bridge loans that I mentioned earlier. Also, nonprofit organizations are eligible to receive a PPP loan. In terms of how much do you borrow essentially the average payroll, or annual payroll past 12 months times 2.5, and that will give you the amount you can borrow. Generally, we're looking at businesses that have been in operation from February 15th, 2019 as kind of the comparison period through 6/30/2019. If for some reason the business is seasonal or is newer, then there are alternative pay periods of time that you can use as the basis of comparison for calculating what that loan amount should be. In terms of the forgiveness, the idea here, the emphasis is on payroll. So you have to use at least 75% of the funds or the proceeds of that loan to cover payroll. So that means salaries up to $100,000, and then any related fringes. So leave, taxes that are being held out for, etc. And then the other 25% could be used for other things such as covering rent, mortgage, interest payments for your building, and related business operational expenses. These loans there'll be a deferment also for them for 6 months to give people time to recover before they have to look at paying anything back if they aren't able to get the whole thing forgiven. There's no collateral. A lot of the stuff SBA loans usually have no collateral requirements, no personal guarantee requirements. The guarantee fee that is normally charged, because SBA will be guaranteeing these, will not be charged, and the lender cannot charge anything for that. And the key to having the loan forgiveness, as I mentioned earlier, you've got to either bring people back or keep the employees you have and maintain their wages and related benefit levels for 8 weeks from the time the loan is made. So that's in a nutshell what the SBA has to offer. I know there's a lot of questions and interest in the Payroll Protection Act, so I believe our next speaker is going to go a little more into detail to that. So I look forward to seeing and answering your questions.
Thank you, Terry. I appreciate you setting the stage there. And some of what I will say will be repetitive of what you may have heard from Terry in terms of describing the Payroll Protection Program. The Payroll Protection Program was enacted as a part of the CARES Act. There is $349 billion allocated for these loans. It's done as a form of an amendment to the existing 7A loan program. So it's a 7A loan. This amends the 7A section to provide for these loans. The loans are to be made during what's called the covered period in the Act, which is February 15th through June 30th. It provides for loans, as Terry indicated, covering payroll and employee-related expenses. The real thrust and purpose of the PPP provision is to try and get people back to work, to enable employees to make their payroll payments and to allow them to pay the mortgage or rent and stay in business so that people will stay at work or get back to work. It does allow you to bring back employees that you may have terminated during the covered period. As Terry indicated, the maximum loan amount is the lesser of 2.5 times your average monthly payroll costs for the 12 months before the loan was made. So you take your average monthly payroll costs for those 12 months and multiply that times 2.5. It's the lesser of that sum or $10 million, which is the maximum amount of the loan. It can be used for payroll costs, health insurance, related items, employee compensation, the interest on your mortgage, not your full mortgage payment, but the interest on the mortgage, rent, utilities, and interest on other debt that existed before the loan was made. As Terry indicated, it's not a direct loan from the SBA. It is a loan to by the bank. I think that, you know, what I've gotten a number of inquiries about how do we get the loans, what do we do? And I tell everybody, go to the bank first. I think the bank and the lenders are the first resource that you go to, because the banks have a real incentive to make these loans. They get a nice fee for the loans that they make. And they have been instructed, I believe, to get these loans out as quickly as they can into the market. I think under the Act, the banks are not they don't have the same responsibilities for diligence on the loans that they would otherwise have. They have the ability to rely on certifications from the borrower. You're going to be required to make certain certifications, and the banks can rely on those without further diligence. So that's an important feature. There are several things that make these loans particularly attractive. Probably the feature that makes them the most attractive is the fact that they can be forgiven. And if you use them for the purposes specified in the Act, payroll costs, mortgage interest, rent, and utilities, use them for those four purposes, then they can be forgiven. And the payroll cost, I want to expand upon the definition of payroll costs a little bit. It includes the compensation that you pay, but also vacation, sick, medical, or family leave that you have to pay, any allowance for dismissal or separation, group health insurance payments, and retirement benefits, and this is an important concept, the payroll taxes that you're required to withhold from the employee's pay, that amount. Now, the portion of the payroll taxes that you as an employer are required to pay, you cannot use it for that purpose or get a loan for that purpose. But I think there were some regs last night that clarified this. The portion of the loan of the payroll taxes that you are required to withhold from the employees, you can include that as payroll costs. Any compensation that you have to pay over the amount of $100,000 is excluded. So you can get a loan for the amount up to $100,000, but not the amount over. I think in addition to this, to make it, just to show the incentive to get these loans out, no SBA fee, as Terry indicated. You don't have to prove that this is the only loan that you can get. Many times for loan programs, you have to go out and show that you've tried to get loans from other places. You don't have to do that in this instance. There's no requirement of personal guarantees, and there's no collateral. And if you are able to get the $10,000 advance, that can be rolled into the loan, and if used for the stated purposes, presumably forgiven. So those are some of the highlights. A couple of little twists I want to point out to you, that the small businesses or businesses that have fewer than 500 employees, there's an exception to that. There are a couple of exceptions I want to mention. One, I'll refer to what's called the Affiliation Rules. If you are if your company is a part of a group of companies owned by, let's say, a private equity firm, then you could be subject to the Affiliation Rules. Affiliation Rules turn on the tests for control or management and ownership of a business. So if a business is under common control with other businesses, then you have to affiliate those employees. Now, the 500 employee limit, though, a second exception I want to mention is that if you are a franchisee, generally, you will be accepted from the Affiliation Rules. And if you And in terms of the 500-person limit, there are certain exceptions to that as well, spelled out in the Act. If you are, small business concern that is either you have a 72 your NAIC classification code starts at 72, which means you're in hospitality or restaurant business. Then it's 500 employees per physical location, as opposed to 500 employees for the business. So that's an important exception. Also, if you get assistance from a small business investment corporation, you also have an exception, or if you're a franchisee. So that's really a high-level overview. The Act, the PPP, is a part of a massive bill that was passed and signed into law. It'll be 2 weeks Friday, called the CARES Act. There are a number of other provisions in that bill, including provisions that provide for loan programs for larger businesses. I think the airline rescue program is also included in that bill. So it's a massive bill, and this is the very first provision of it, and one that I think will be most attractive to the members of the Atlanta Business League. I like to give kudos to the Atlanta Business League for this series and for hosting this presentation to make sure that its members are aware of what I could believe could be very important and perhaps life-saving business opportunity for a number of small businesses. So I'm at my limit. I'll now turn it over to the most important person in the room, the banker, Mr. Farron Logan. And all of you friends of Farron who we didn't call him previously, now call him.
All right. Well, thank you very much, Mr. Coleman. And thank you, ABL, for the opportunity to be here and present on behalf of Citizens Trust Bank. And we are happy that we are a participating bank in I'll just say the PPP program. And, not all the banks are participating banks. And right now it's a mad rush. Everybody's rushing to the banks trying to get these applications done. Right now we have, I think, in excess of 300 applications right now. And we are doing our best to make sure that we go through these applications and get you through to approval. Now, one thing I wanted to emphasize in this presentation is that you should apply. You should absolutely apply. Now, I've been in banking for about 30 years, and it's unprecedented that we're having to go through this, and in reality, it's quite sad. But it's also unprecedented to have the kind of loan that we have in this program. This PPP loan, 100% guaranteed from the full faith of the government. So essentially, the risk is virtually zero. The fact that you don't have to put up any guarantors, you don't have to put up any collateral, and there's essentially no underwriting. All right, so that minimizes the risk in a very, very significant way. That's motivating the banks to go out and get these loans done. So what I wanted to do is, instead of being too repetitive, I wanted to cover some of the details, some of the application requirements, because I think it's going to be important to understand that if you provide the right documentation on the front end, it'll help expedite the process. It'll help us get through those 300 plus loans that we're going through right now. Plus, it will ensure that on the back end, when it's time for you to apply for that loan forgiveness, that you've done everything that you need to do in order to get as much of a forgiveness as possible. Now, as a general rule, before we go into the slides, as a general thought, I like to think of it as 10 weeks of payroll. Okay, that's what essentially 2.5 times the average monthly payroll equates to. So it's about 10 weeks of payroll. And then you have about the opportunity for forgiveness is equivalent to 8 weeks of payroll plus. Okay, so first of all, 8 weeks and 10 weeks is close. So if you can just maintain the same payroll and keep the same people on your payroll, or hire people back to maintain the same level of payroll, then you'll have an opportunity to have that loan forgiven at least 8 of the 10 weeks. Now, there's an opportunity to expand that to an even higher amount, because you can also include certain expenses, like for mortgage interest, for utilities, for rent, those types of things. In addition, those actual costs over that 8-week period is added on to the payroll cost that gets you even closer to the dollar amount of the original loan amount. So to the extent that you understand that, and to the extent that you can provide adequate documentation to the bank so that you can qualify for the full extent of that forgiveness, the better off you will be. And I'll say, quite honestly, the better off the bank will be, because we're in the risk business. If any portion of that loan is not forgiven, then it's a continuation. The loan is up to 2 years. And then I think after 12/31/2020 of this year, that 100% guarantee drops. It drops down to 85 and 75% depending on the level of the loan. So there is some risk component that the bank, some level of exposure that the bank, and then there's some performance issues too, like if you don't do everything you need to do in terms of making sure that you pay at least 75% towards payroll during that 8 weeks, then again, that minimizes the amount of the forgiveness, which again increases the amount of exposure that will be on Citizens Trust Bank's books. So Owen, if you could pull up that slide, please. Thank you. All right, so I wanted to just kind of take a few minutes to talk about some of the checklist items that we require, and this is reasonably consistent, I think, with most banks. All of the banks have a little bit of discretion in terms of the type of information that they require. But as a general rule, we just want to make sure that you are a company that is legitimate, a company that is in operation, and a company that has a legitimate need for this paycheck protection loan, okay? So the first item that we have to have in the package is a PPP application, okay? The second item that's listed there is a borrower's information sheet, okay? Now it's important that when you are preparing your I guess the loan amount, the 2.5 times the average payroll, it's important that you provide a worksheet, okay, to show exactly how you determine your loan amount. And as it was said before, you looking at the average payroll over the trailing 12 months. So the trailing 12 months is the most recent 12 months. Or you can actually look at the 12 months of payroll throughout 2019. And the best way for the bank to document that, okay, is to look at not a 940 form. We've been updating this. And by the way, this particular, this comes right off of our website. This particular website will be updated. As Terry mentioned before, there are a lot of changes. And so we're having to change and update. So this information will be updated probably this evening. So it will look slightly different than the way it looks right now. But if you provide a 941, which is a quarterly tax returns that each employer sends to the government that discloses the amount of payroll that is paid on a quarterly basis, if you provide 4 of those, then that will aggregate, for example, over 2019, the total amount of payroll. And then if you take that payroll and you divide it by 12, then you'll arrive at an average monthly payroll. And then if you multiply that times 2.5, then you would get to the qualifying loan amount. We do ask for a corporate borrowing resolution. That is so that we can know for sure who's authorized to sign on behalf of your corporation and that your corporation is authorized to engage in this debt. There is a loan forgiveness assessment. There's a spreadsheet that we have that helps you qualify. So you'll know right up front roughly how much your loan forgiveness will be. So we do have a form on our website to help you do that. Owen, if you could go to the next slide, please. And then we talked about a little bit about the payroll documentation, and part of that payroll documentation and part of that qualification is just not the salaries, but it's also the benefits that's associated with those salaries. And it's also any state and local taxes. In aggregate, that will determine what the total payroll amount will be before you divide it by 12 and multiply it by 2.5 times. And so in providing that documentation, we will ask that you provide, for example, information that might be provided from a payroll company such as an ADP. They will provide the kind of specific information that, for example, there's a rule about qualifying people up to $100,000, but not qualifying the amounts over $100,000. Well, an ADP payroll, for example, that may itemize all of the employees with salaries, even those people over 100,000, then we can see and document exactly how you arrive at your loan amount by excluding those amounts over $100,000. And then we require a 3 months of bank statements, and this is not a requirement for existing existing customers. And then finally, just 3 months of 3 months of supporting documentation, and that will help us, for example, to verify the amount of mortgage interest paid, rent expenses, and utilities paid over the last 3 months. And so that's pretty much in a nutshell. I'm actually trying to go very fast just so we can stay on schedule, but in a nutshell, that sort of represents the kind of documentation that we look for at Citizens Trust Bank.
Thank you so much, Terry, Michael, and Farron. Excellent presentations and great information. Samantha, do we have questions? Can you hear me?
Sorry about that. I was muted. We
Okay.
do. We have plenty of
A lot
questions.
of questions, yeah.
Yes. All right. So the first, now I've heard from another webinar, a small business majority, that the 10K advance that was supposed to take 3 days is only $1,000 per employee, not the 10,000. Is that true? Have the 3 days turned into 3 weeks? Any idea of what is true?
Okay, I'll take that one. In terms of the advance, it is up to $10,000. It's not a flat amount across the board of 10,000. And I believe that that figure is correct, that they're looking at it based on a rough estimation based on number of employees. So that part is correct. In terms of the time frame, the statute, and I think our internal goal is to get to a 3-day turnaround. Of course, with such an initial onslaught of applications in the first few days, they have not hit that time frame, but I think they've gotten systems in place that as they work that initial group of applications down, we will get closer to that 3-day average. In terms of weeks, we might be talking about the EIDL loan, which is the one that is made directly by the SBA. The turnaround time on those initially were, expected to be between 2 and 3 weeks. My understanding that has come down, and now they're looking at 1 to 2 weeks.
Okay. With these loans, is credit pulled when you first apply or later during the process?
Oh, no, no credit is pulled for these particular loans because there's really no underwriting. We're not qualifying you necessarily on the basis of your ability to repay, because we recognize that you're struggling. This is a struggle for everyone. We just want to make sure that you are properly certifying that you have an issue, that you have a problem, and that you have employees, and that you need cash to be able to bridge that gap. And hopefully this loan will do just that, help to bridge the gap until you can finally open your doors and begin to generate that revenue again.
Okay. I can't find the current SBA Express lenders. Who can provide a list so that we are able to contact them?
Okay, we could do that. There's a tool I know that was on the website that I mentioned earlier, where you could do a search by zip code of the SBA lenders in your particular zip code. And we're also working on updating the one specific to Georgia. So if you would send us an email, georgia@sba.gov, that's the Georgia district offices. email address. We are monitoring that address email box, so we'll be glad to send you a list.
How do we check on the status of anything related to EDIL? $10 SBA Express Bridge loans, PPP, it just seems like everything is out there in waiting mode. We can't trust what we hear during the daily briefings on national TV. Please advise.
Okay. In terms of the EIDL loans, and I'll have to pull the number. I'll step away for a second and get the number. There's a toll-free customer service number for that. The email address for the customer service center is disaster assistance, disaster customer service, all one word, disaster customer service at sba.gov. Just kind of a note, the Office of Disaster Assistance with the SBA is really the operation that processes the EIDL loans, or the IDLs. At the district office, we're not involved in the process, so we don't have access to the system to check statuses directly. But that you can submit an email there, and they're trying to turn them around a little more quickly now that they brought on additional staff for this particular time. And I'll get the phone number for you in just a second.
Okay. A recent article indicated Wells Fargo has reached their cap and are unable to fulfill any more PPP loans for their customers. What other lenders are available to small businesses that don't require you to be their customer?
We don't have a particular list right now. What we've said is that any currently participating SBA lender can deliver these loans. If they weren't currently, an institution was not currently an SBA lender, we had a quick onboarding process to allow them to be able to make these particular PPP loans. Beyond that, it's a matter of, does the institution choose to participate? And there's nothing in the statute and CARES Act that says they cannot have additional parameters for who they're going to deliver those loans to, as long as it doesn't directly conflict with the act itself. We're actually in the process, as we speak, have staff region-wide, not just here in Georgia, looking, surveying their lenders to see exactly who is participating and any additional parameters they have. So hopefully in the next couple of days or so, we'll have a better handle on that to advise people as to who's more open in terms of who they're serving with this program versus others.
Okay. I've heard that you can include your 1099 folks, but now I hear you can't include 1099 in your PPP calculation, which is correct.
Well, the latest information, and I have to qualify it that way.
Right. We all
The
do.
latest information is that if you have 1099 employees, you cannot include them in your calculation for that for your loan amount. Those 1099 employees, those independent contractors, those sole proprietors, have the ability to apply themselves to apply independently for the PPP loans. So an employer who is making payment to these individuals cannot include those 1099 wages in their calculation.
Okay.
And let me say that some of the interpretations of the act by the SBA have been fluid, and they've changed. And in some instances, they're a little different than what the statute says. The statute says the sum of payments of any compensation to or income of a sole proprietor independent contractor that is a wage, commission, income, net earnings from self-employment. So basically, I'm sorry, this is saying that in essence what Farrah is saying, that the independent contractors and sole proprietors can get loans. They're eligible to make their own applications for loans based on the amount of income that they receive, up to $100,000. So.
Okay. Next question. Are new employees and new operating costs covered under the PPP loan?
Yeah, I read
Yeah, I
that.
think,
Go
yeah, I
ahead.
mean, I think and Terry can help me out here. But I think up through at least June 30th, if you add employees to your payroll, especially those that you may have let go or you downsize and then you replenish your original level of payroll or number of employees, then that would certainly be helpful to you in qualifying for the amount of loan forgiveness, for example. And looking at the actual components of the loan forgiveness, one of the components looks at the average number of employees, for example, from January 1 to February 29th. Okay, so essentially over a 2-month period, and then they compare that average number of employees to the average number of employees during that first 8 weeks period since inception of the loan. And as long as the number of current employees is not more than 25% of the original amount of employees, then that would not represent any deduction in the amount forgiveness. If it should exceed 25% of the original amount, let's just say that you're about 33% down as opposed to 25% down, then essentially it would represent about an 8% reduction in the original amount of the loan.
Yeah, I think you covered that pretty well.
Yeah, I think that's consistent with what I understand from the statute.
Okay. One person in the chat writes, I spoke with Bank of America today where I've been banking for over 8 years. I understand that if you don't have a business credit card or a loan from Bank of America, it may be difficult to get the PPP. I went through the application and this question was on the application. The application did allow me to move forward. However, I'm not sure I will be eligible. I did not submit until I received clarification. How should this person proceed?
Okay.
Yeah, I mean, I would say, obviously, I think it's pretty common knowledge at this point that most of the banks are looking to take care of their customers first. And so it depends on what line you stand in. I think it's important to stand in the right line. And so, and just being quite honest, I think that people should go to their bank initially. But if their banks are, looking at their customers first, then understand that, you may be realistically pushed down in terms of priority. So just be mindful of that. It may take a little bit longer for you to get a decision. The good news, I think, is that we're hearing that if this $350 billion should run out, then there may be another opportunity to refill the bucket. So for those people who may not be eligible the first time around in the first round, may actually be able to take advantage of this program in round 2.
I think that some of the banks are generally taking care of their existing customers first. The statute doesn't, require that. It doesn't prohibit it. It doesn't require it. So and I think with respect to the requirement of a Bank of America credit card, or I remember what else you said, but again, that's not something that's required by the statute or the regs, but the banks have a little bit of flexibility to interpret, the SOP or the standing operating procedure that they've gotten from the SBA differently, and they may interpret it differently, and that may be an area where you get a little bit gray.
Okay. Please advise if an owner member of an LLC is eligible to be considered as an employee with a PPP loan. The bank I'm applying with just asked if I am a 1099 employee, which I'm not, but I need clarity from the SBA perspective as the owners of the LLCs are typically considered members. The loan application was changed to include LLCs, so I'm hoping this isn't a problem.
It would not. LLCs are eligible.
Okay.
Yeah, I would agree with that. I mean, I think the owners of LLCs generally get what's called guaranteed payments.
Right.
But that's a form of, I would treat that as a form of compensation for purposes of the application and submit it. You know, that would be the approach I would take. I think the rules are a little unclear on whether or not, you know, because members are not necessarily, not always for some purposes considered employees, but you know, the guaranteed payments are treated differently for different purposes. And for the purposes of this loan, given the interest in getting this money out to affected businesses, I would take a liberal approach and include those guaranteed payments.
Yeah, and the only thing I would add to that is, as long as the owner is a W-2 employee, in some cases they do actually receive W-2 income, they can certainly qualify under the program. And there are occasions when people who own business, they choose for whatever reason to not issue W-2 payment for themselves. They opt to do cash distributions instead, without actually having the additional expense associated with payroll costs. And so in that particular case, it would be difficult for us to document that any income in the form of a distribution would be eligible under this particular program, just kind of based on the way the rules stand right now.
Okay. Can you provide interest rates for all of the loans that were mentioned?
Okay, I can provide it for the economic injury disaster loan. And that is 3.75% for small businesses. And then for nonprofit organizations, it's 2.75. As far as PPP, I would have to double check, but I think it's similar to, in that sense, it's similar to our business programs, where it would be, oh, well, actually, I take that back. And I'm confusing myself now. I'm thinking, actually, it's 1% for the PPP. So 3.75, 2.75, and 1%.
Okay. Who is not being approved for these loans?
What was the
I'll take
question?
that one. Right now,
Well,
I mean, we haven't had any reason to decline anyone, quite honestly. But but there may be a case where somebody, based on size standards, for example, may not be eligible for this loan. We are a small community bank. Most of the applicants that apply at Citizens Trust Bank are less than 500 employees. And so right now, we don't really have a reason. We're really not checking, financial capacity, if you will, to perform on a loan. We're really not necessarily, looking at credit history. We're relying on certifications. It is in many ways a loan based on trust and certifications. Because of the urgency to put the money out the door, there's just not enough time for us to go through the normal due diligence that we would otherwise have to go through in approving a loan. And so they're asking us to get the money out the door. The only challenge with getting the money out the door, quite frankly, is just logistics. It's banks and their infrastructure and capacity to be able to deal with the volume of loan applications that's coming in the door. And in some cases, you do have the SBA who may, for whatever reason, the system may jam up or get overloaded or whatever the problems are going on that keeps these applications from sometimes being able to be transmitted through the process.
Okay.
Let me say a word about that. I mean, the loans do require certifications, and those certifications presumably are made under penalty of perjury. So if you cannot make a certification with respect to either size or any other requirements that you really need the money, that you've been impacted by the economy, if you can't make those certifications, then you're not going to be able to get the loan. If you do make the certification and it turns out to be untrue and you knew it was untrue, then you're going to be subject to some kind of penalty later, perhaps, if somebody finds it, but it's a risk. So I think that, I think people have to be mindful of that as they make their certifications, that there's some risk to making a certification that not to be correct.
Okay. Related to the PPP loan, what can be included in the utilities? Are employee benefits covered, or can they be added?
I mean,
In terms of qualifying the loan amount?
I believe so.
Okay, and I believe the question was what can be included in utilities. Now, utilities was not explicitly defined. However, our interpretation of utilities is in the very traditional sense of the word. Things like, power, electricity, telephone, trash, those types of things would represent utilities. Terry may know of a more up-to-date definition or may have more clarity about, what's included in utilities. But from our standpoint, in terms of accepting applications, we're looking at it in a very traditional sense of the word.
Okay. Is it
the second part of that question was an employee benefits included, and the answer to that generally is yes.
Okay. Is it recommended that people obtain assistance while they're preparing the paperwork for the loan?
Well, it's interesting that you asked that question because I tell people to go to the banks because the bank can generally give them good guidance, and the bank has an incentive to get the loan out. There are some people who are, helping folks as they're what's called agents, but the rules that were promulgated do a couple of things. One, they limit the amount that agents can be paid based on the loan amount, but also they state that the agents have to be paid out of the bank fees, and they can't collect from the borrower. And I was very surprised to see that in the rules. So I find the question interesting. So if you need it, yes, I would go to the bank first and make sure the bank understands that you are going to need it, so the bank can understand that it's going to have to come out of their fee. That's what I would have.
Okay. I was told by an SBA employee that if I applied for the EIDL and checked cash advance before Thursday of last week, that I needed to reapply, but my place in the loan process would not be impacted. I wanted to know if this is true and if applying twice would have any negative impact.
It sounds like a Terry question.
Yes,
Yeah, I think
but
I
don't see Terry.
Did she drop off? Okay. Yeah, we may have to
Postpone
get
that.
back to you on that one. Unless, Michael, you got an answer for that one?
I don't have an answer. I don't know why you would have been told to reapply. I don't really quite understand that. So that would probably be it. We'd have to punt to Terry on that one. I agree.
Okay. All right. Farron, a question for you. Does Citizens Trust Bank require previous business relationship customers in order to apply? Or do they have to have an established relationship?
No, you do not. As of right now, we are accepting both customers and non-customers. And again, we, out of about 300 customers, I think we had about 150, out of 300 applicants, we had about 150 customers, if I remember correctly. So right now we're running about half customers and half non-customers.
Okay. What is the time frame that an employer has to spend or to allocate the funds?
Well, my answer would be that the measurement for the use of funds will be over the first 8 weeks, okay? And they're gonna look at, to what extent those funds were deployed towards payroll. For example, if, in terms of the use of proceeds, you can use the money for payroll costs, mortgage interest, rent expense, and utilities. But as a rule for forgiveness, the expectation is that 75% of the use of the proceeds is deployed towards payroll costs. And so in the event, for example, you should if you had $100,000 and payroll originally represented, I'm sorry, if you had a $100,000 loan and then over the 8-week period, you utilize 70% of the proceeds towards that payroll and not that minimum 75% that the SBA is looking for, then that would in effect represent a 5% deduction in the amount of forgiveness of that original amount. And then there are other categories, and that's just one example of what they look at. I mentioned earlier about looking at the number of employees and how that can represent either a zero deduction or a certain percentage deduction in the original amount of the loan. So it's real important that, that you genuinely utilize the funds predominantly for the benefit of payroll. The spirit and intent of this program was to keep people employed and maintain employment until that I guess that coronavirus curve can be flattened and then eventually taper off, and then people can get back to work and companies can open their doors and then companies can become self-sustaining. So in effect, this is like a bridge loan that ultimately turns into a grant. So I encourage everybody again to make sure they take advantage of this loan, because there's very few opportunities in history where you are able to get money to help your company and then have an opportunity within a matter of 8 weeks to have a zero obligation on that loan and deferments for the first 6 months in the meantime. So please be sure to take advantage of this loan.
And let me also add, there's a definition in the statute of the covered period. And that covered period is February 15th through June 30th. And that's the period of time during which the loan is available. It's not clear you have to expend the funds during that time period, because conceivably, if you didn't get a loan until June 15th, then you'll have the period of time after that to pay payroll taxes. But right now, that's what the statute provides, subject to future amendments. And I would not be surprised if this period is extended, if more money becomes available. I think what I've been to a couple seminars regarding this topic, and what folks have been saying is that they expect the money to run out. They expect the $350 billion to go. It's not just small 20, 30 man operations that are applying for loans. I mean, there are a lot of very sophisticated businesses and larger businesses applying for these loans because they also are being hurt. And they're trying to, they're interpreting the affiliation rules in a way that makes them qualify. So the money is likely to run out, which is why you're seeing a rush early on. So I wouldn't be surprised, as Farrah indicated earlier, that more money becomes available, and in that kind of time that some of the rules or time frames are extended. Really all depends on how long this horrible pandemic lasts.
Okay. Trying to, we have quite a few more questions left to go.
Terry's back.
Yes, I am back. I got bumped off.
So what was that question that we were waiting for Terry to answer?
I'm trying to find that for you.
I think
I
just
think it was
saw
from
the tail end of it.
from the borrower who said that they were told if they had applied for an EI, for a disaster loan, and they hadn't got anything by last Thursday, they had to reapply and they wouldn't lose their place in line. I think that was something like that.
Okay, I think I know what that is. Initially when this was rolled out, the agency used its standard disaster loan application portal. And needless to say, with such a tsunami of applications and activity, a lot of documents you had to upload as part of the application, the system just gave up the ghost, so to speak. So they did redesign a new portal. We actually brought in an outside entity, contracted with them to put that together. And then about the same time as that happened, you had the CARES Act enacted, which brought on the advance, the up to $10,000 loan advance. So people who had applied under the previous portal, the original portal, there wasn't anything in place for enacting that particular piece at that time. So what decided the quickest and cleanest way to do this was to go back, have people to apply in the portal, the new portal. You don't have to upload a lot of stuff. The information, you're basically checking certification boxes and entering some information. So you can go through it in about 20 minutes or so. Then that would actually qualify you to get the advance. And what we were told by our Office of Disaster Assistance, that they had a way to match the new application with the old one, so that essentially you wouldn't be starting all over, that they could keep you basically in your place in the queue that you would have been anyhow. But now you have the advantage of being able to access that.
Terry, you made a statement that that I think needs to be clarified.
Okay.
Initially, many people thought that the $10,000 advance could be applied for, period. Did you just say that in order to get the advance, you must have applied for the
IL? Yes.
So both must take place.
Yes, because basically it is termed as the economic injury disaster loan advance.
Okay.
And did I see a question about whether you could apply for both EIDL and PPP?
I think that's a good question. Go ahead and answer that one. Yes.
Okay, and the answer is you can. The key is that you cannot use the proceeds of both to cover the same exact thing. So keep in mind with the PPP, at least 75% of that money has to be used for payroll. With the EIDL loan, you can use it for payroll and your accounts receivable or payable, etc. So you have more latitude with that. So it is possible that if you have a larger number of employees, you want to use more than 75% of the PPP for that, or use the whole thing strictly for the payroll component, and then the EIDL could cover the other cost.
The statute also contemplates that if you received an EIDL earlier and you decide you want to refinance that with the PPP, you can refinance the EIDL, take it out with the PPP. And
right, you can.
If it's used for the right purposes, you can get it forgiven.
Exactly.
Okay, Terry, question for you. Are you able to repeat the email you provided earlier for those who were trying to gain access to the Express loan?
Okay, I just typed it in. So I don't know if everyone means everybody on the call or just the panel. But I'll say it again. It's disaster customer service, all one word, disaster customer service @sba.gov. And then there's also a toll-free number for the customer service center, and that's 800-659-2955. I know people had some really long waits initially. They've been really working to staff up the customer service center. In fact, they're hiring people to handle things virtually, so you don't have to be physically located there. You could take care of calls wherever you are. So we expect that to, rectify over the next, few days or so.
Okay, Samantha, I saw one question that asked if your payroll was suspended. I think Sue Taylor asked the question about your payroll being suspended. if you suspended it, if you could be eligible for something. Do you see that question?
I did see that. I think I did see that. If your payroll says February and haven't been able to pay. And I think it goes back to, and I'm trying to remember offhand the
To
date.
February 15th, February 15th.
Yeah.
Mhm.
So anything from that period through June 30th is what the window of what you're looking at.
Okay, so I'm sure there may possibly be a number of other questions, but I hope that through the process that we have clarified many of your questions and that this series has been helpful. And if you have additional questions, please share them with us. And if we see that we have not answered that question through this process, our goal will be to get an answer back to you. Again, I want to thank Terry Dennison with SBA, Michael Coleman with Thompson Heim, and Farron Logan with Citizens Trust Bank for spending the afternoon with us and answering these questions and sharing all of this information. This is the Atlanta Business League's ABL Weekly COVID-19 Issues and Opportunities Series. Thank you so much for joining us.
Thank you.
Take care.
Good luck, everybody. Stay safe.
You
Thank
too.
you, Michael.